Okay, so why don't we get this party started? So joining us today, we've got Brendan Monroe and Eaton Lamb from ICICI Bank Canada. Now, I got to be honest, every time I see ICICI Bank, I want to keep going, and I just want to say ICICI. But that's just me. I'm sure I'm the only one that's ever done that. So anyway, over to you, Brendan and Eaton. Feel free to take it over. We're going to have you as the opening guest. You guys can kind of have, I always like kind of say about half an hour, and then you can bail out, and we'll just carry on with the rest of our meeting.
I can promise you it's not going to be a half hour where you have a nice tidy little discussion for us. And if you want to send us lots of particular file questions at the end, then happy to do that as well. But
awesome. And we're a pretty talkative group too. So I encourage everyone to have the questions. I'll moderate and I'll watch the chat side of things, but we'll feel free to, we like to interrupt. So just so you know.
That's great. Thanks for the warning. Good afternoon, everyone. I'm Brendan Monroe. I'm the BDM for ICICI Bank. It stands for the Industrial Credit and Investment Corporation of India Bank, which was founded back in the mid-20th century. And since that time, ICICI has grown to be an international financial powerhouse, one of the largest private banks headquartered in India, with operations in nearly 20 countries around the world. Despite the enormity of ICICI on a global scale, we're definitely a niche lender in the mortgage space in British Columbia and in Canada. And we'll talk about some of the niche solutions that we've carved out for ourselves in British Columbia in the last few years. You'll find that all of our mortgage servicing, our mortgage underwriting, and mortgage sales are all done here in Canada. So you're not calling the Indian call center for assistance. You're either speaking with me, you're speaking with somebody. My underwriting team, they're all here in Canada in places like Edmonton or Toronto. And I'm, of course, located in East Vancouver. I'd love to get out to see you all in the Okanagan as soon as we get COVID lifted. In the meantime, we have Zoom meetings like this, which make me wish I could get onto road trips out and have some wine with you. But in the meantime, this is the best we're going to do. Pete, would you mind if I share a screen? I got a standard slide deck. Let's see if I can do this without requiring permission. Host has disabled participant screen sharing. Yeah, flip switch so we can get that.
I think you should be able to see that you're now a co-host.
Great, yeah. PowerPoint. Awesome. So ICICI Bank has two main lines of business. We do a insured business and we do a conventional business. You'll see some other lenders have another bucket that is the insurable, or their back-end bulk insured. ICICI doesn't do that. We're just strictly insured files or conventional files. There's many great lenders on the insured space across British Columbia. It's really a commodity. You want to have great service and great relationships there on that insured side. And there's also going to be a huge differentiator on price. Everybody's competing for the lowest price. I think you can find that ICICI Bank is very, very competitive on the pricing side on insured mortgages, with rates as low as 1.69 on fixed rate now, variable rates starting at prime minus 1%. So you can definitely be in the conversation in the mix with ICICI as far as its insured product. And all the regular lender guidelines apply for insured, like GDS, TDS of 3944, amortizations of 25 years. You've seen all those constraints before. We just basically align with all those insured guidelines. A couple of things we do that are a bit unique on insured is if you have non-subject rentals that you're deriving some income from, but you're buying a subject insured property. We have a very nice worksheet that you'll usually be allowed to use for that non-subject income. We also automatically float down the rates for your clients between commitment and funding. So you don't have to call your underwriter and ask for an exception because the market rates went down. So if you've got a file committed with us and we go down another 5 or 10 basis points, that benefit will automatically flow through to the borrower. We use the Child Canada Tax benefit up to 100% in most cases. So that can make the difference for those families that are trying to get onto the property ladder and using some of that income. We can use 100% of it most of the time. When it comes to our conventional business, we do a lot in the purchase, we do a lot in the refinance, and we do a lot in the rental property business as well. We do up to an 80% loan to value and up to $1.5 million. And we don't apply a sliding scale. So that's going to be different than what you see from other lenders, where once you're over that $1 million mark, they're starting to adjust things. We're just going to lend money at the regular rates, right up to 80% loan to value, right at our regular conventional rates.
Brendan, is that across Canada, or is that particular to BC?
We're talking about BC. We're talking about Ontario. If you have a deal that's in the prairies, just give me a call. Everything's weird and different in the prairies based on how things are set up right now. And so we'll take those files on a case by case basis, but I'll give you the BC and Ontario situations because they're the most common.
And that's straight across BC. It's like not in the major centers, or what?
I can get into a coverage map because I think that's going to be important for your team here in the Okanagan, because some of the communities we are really happy to lend into and other ones are a little bit trickier for us. So maybe I'll just create a bit of a space in the conversation here for that in just a couple minutes. GDS TDS ratios, we have a very high tolerance for elevated GDS TDS on conventional. So 42, 47 GDS TDS will do all day. And then if you have a client who is a little bit higher than that, we have an extended ratios program. There's a couple of provisos or qualifiers for that program, but that can extend ratios all the way out to 50, 55. And so that's a unique way that we handle some of those elevated ratios. And I'll talk about that more in a moment. Before I get into credit, maybe I'll just talk about lending areas. I don't think I have a slide specifically, but I know that's come up a couple of times in conversations with brokers here from your office. If it's an insured file and it's pretty much anywhere in the Okanagan area, the insurers are happy with it, we're probably going to be happy with it too. So insured files, we have that backup from the insurer. And if places like, Penticton or Soyuz or smaller centers, we're probably going to be able to confidently do an insured file there. If it's an owner occupied conventional file, we want to look at the communities that are 10,000 plus, or that are within a 75-kilometer distance of downtown from one of those communities. So we're happy to go to Vernon, we're happy to go to Kelowna, we're happy to go to West Kelowna. We're happy to go to places like Salmon Arm because they're within that 75-kilometer distance from one of those centers. If you're looking at, a place like Lake Country, talk to me. If it's owner occupied, it should be okay. But we're really treating some of those smaller communities on a case-by-case basis. We're not quite at the credit union level where we'll, just lend everywhere in small town, but we're going to try to make it work as best we can for you out in the Okanagan, especially on owner-occupied. On the rental side,
Lake Country is like 10K outside of Kelowna.
I know. I've had a couple of inquiries from your team already before, and it was for rentals, and we said no because they're a rental refinance or a rental purchase. And we're a lot more constrained on rentals for what we do. We basically want to be right in town in Kelowna, or even, right in town, maybe Vernon, but we're looking at just how many sales, how many transactions are taking place in that community year to year. We want really a lot of volume and a lot of liquidity before we're able to, do a loan on a investment condo or an investment house in the Okanagan. So primarily we're looking at owner occupied for purchases and refinances. If you have an investment property that's in the Okanagan, it's in Kelowna, great. If it's somewhere outside of Kelowna, let's just talk about it specifically and we'll see if we can make it work.
Brendan, we're good in Penticton, yeah?
Yeah, Penticton has 15, 20,000 people there?
About 34,000.
It's grown, that's great. Yeah, then we'll do owner occupied in a place like that. And then your rental side might be a little bit trickier. But if it's owner occupied or the basement, that's still fine. When I say rental, I just mean like a purely investment property. Let's talk about credit. On the conventional side of ICICI's business, let's start with high ratio. We want, we're looking for the AAA type borrowers with 700 plus credit, even down to 680 is probably okay, as long as we can sell it on the insurer, and they're usually sort of pushing back on files that are below 680 uninsured right now. But on the conventional side, we have a lot more flexibility. So we have policies that are somewhere between the A space and the B space is probably the best way of looking at it. We're not looking for the pure B deal, and we're probably not going to compete very aggressively with the Scotias and the TDs on the really pure A deal either. We're looking for those clients that fall in between A and B. You might want to call it B plus. You might call it A minus. I know I'd be a lot more comfortable with an A minus on my report card, but if that sounds like your client and the big bank said no, then before you send that file over to an Equitable or a Haven Tree or a Optimum or a Home Trust or whoever your favorite B lender is, pick up the phone, give me a call, send me an email, see if that fits before you send it off to one of those pure B lenders. We're happy to work with borrowers whose credit starts with beacon starts with a 6. So if you have a primary applicant who's the one who's making the more income on the file, that's your primary applicant. And if their beacon score starts with a 6, then we're pretty much on side. If their secondary beacon's a little bit lower than that, then, again, case by case. We're not looking for, like I said, really B deals where both applicants are in the 500s, but if you're in somewhere in the 600 range, then we certainly want to consider that file. If you have no beacon, especially if it's like a new to Canada scenario, we can probably find a solution for that. Sometimes no credit is better than bad credit, and we have some policies that we can work through those low credits or no credit situations.
Brendan, do you look
Yes.
at Equifax or TransUnion as well?
We look at Equifax primarily. We can look at TransUnion. Usually we'll do like a average of the two. And if something shows, I've seen sometimes where Equifax is like not great, but TransUnion is a lot stronger. So we want to do an average of those two bureaus in that situation. When we're talking about conventional mortgages, we can do up to 80% loan to value on most property types. So that's purchases, refinances, rentals. We allow a 30-year amortization. We talked about the 42-47 GDS TDS ratios. We don't change our rates if they go above that number. We don't change the rates if they're in the upper range of that number. We just have our regular conventional rates that apply. We do have an extended ratios program that can help get those rates or those ratios up to 50-55. And in order to qualify for that program, we're going to have one of the applicants that's earning $80,000 a year of employment income. So they're a nice, solid salaried borrower with predictable income. And we're able to risk mitigate with a 1% lender setup fee at the point of funding. So that program helps us for couples that maybe you're going through a separation and one of the people wants to keep the matrimonial home. That can be a really great solution with those high elevated GDS TDS. It's also really helpful in those scenarios where you have somebody who went out and they bought a Land Rover and then walk into your office a few weeks later saying, I got that new car in the driveway, now help me get a mortgage. Everything's going well at work. I got a promotion and now I got all this money and I'm spending it. So obviously that the order in which they purchase things has a bearing on this, but if you have a borrower who did things slightly out of order, that elevated TDS GDS might be able to help save that file. You said you had to interrupt lots, Pete. So if you have any questions, this is probably good.
Why are they buying Land Rovers? Come on.
That is the question, isn't it? Why would you? It'll look nice in your driveway.
Alone, right?
Look nice in your driveway of your rental property where you're paying the rent. When it comes to rental properties, we have a very unique rental income treatment. If you have an owner-occupied property that is the subject, and you have a basement suite or a laneway house in that property, we can apply an 80% rental offset in most cases, which means your GDS TDS ratios are automatically going to go down very aggressively because we're offsetting most of that P&I with the rental income. So it's a great tool for you who have clients that have a basement suite. Might be able to get that done here with ICICI, where we won't be able to get that done elsewhere. Also, when it comes to renter-occupied investment properties that are the subject, so that's the pure rental properties, we're going to apply an 80% offset on most property types. We're going to apply a 50% offset on condos. We're also going to allow you to exclude the taxes and heat from the ratio calculation. So again, some very unique treatments of the rental income to help your clients that are looking to become semi-professional landlords and own 1, 2, 3, 4, even more investment properties. All of our investment property files attract a 1% lender setup fee. So just good to know about that up front. And for renter occupied investment properties that are non-subject, so let's say they already own 5 or 6 rental properties and they're looking to refinance them. One of them, they're looking to refinance multiple. They're looking to maybe add another house to that portfolio. And we use a very easy to use and very beneficial worksheet that does not limit the number of doors. So the rental worksheet is going to capture the qualifying income for your 4 favorite properties in the portfolio. And then properties number 5, 6, 7, 8, there's a column to be able to capture that income and just exclude the income and just debt service those properties. And I'll show you what I mean on the next slide. There's no maximum number of doors. And then when you're done your work on the rental worksheet, you're going to add the surplus back to gross income. And I'll show you what I mean by that.
Yes, please.
And if you have one of these Excel sheets on your desk and you're curious about how it works, I'm happy to walk you through it. It's available in our portal. You guys have access to our mortgage broker portal. And if not, I'll make sure you do. But our rental worksheet allows us in these first 4 columns, property 1, property 2, property 3, property 4. That's where you're going to put in all the pertinent details on a rental property that they own. And in the 5th property, which is mostly black, or 5th column, which is mostly blacked out, there's a cell for monthly principal interest. So you'll see that we're not using the income from property number 5 or 6 or 7. So you might have a really strong number from the first 4 columns. You might have a negative number from that last column because we're just applying the P&I and not the income from it. So what that means is we're going to treat all these properties as profit centers and not necessarily as liabilities. So if you have a borrower that has 5, 6, 7 properties, this might come out as a wash. It might come out as a 0 that you're adding to gross income, but we're also not worried about all those extra properties being liabilities. So keep this in mind if you have those semi-professional investors who have a wide number of properties in their portfolio. In a lot of cases, we can actually just use that income and add it to gross, which is helpful. And if they have, a number of properties beyond number 4, then we're not going to give them a really tough treatment on that liability side. Does that make sense so far?
I'll plug it in and figure out how it looks because I got a file.
Give me a call if you,
yeah.
That sounds great. Give me a call if it doesn't make sense. But this you'll find is very easy to use once you're in there, and it usually produces a nice green number at the bottom that you can add to gross income, which is helpful.
Yeah, I've used this before with other clients, but I was perplexed by this description, so I'll give it a run. Okay, thank you.
Wonderful. We also like to position ourselves as a lender that's between the A and the B space on conventional. So I mentioned if you get a decline from one of the big banks before you send it off to the pure B lender, give us a call. We can probably help you out with your hourly or part-time employees that might not fit the bank's terms and conditions. We have a program for BFS clients that have been in the business for a little under 24 months, whereas other lenders probably want 2 years. We can certainly work with beacons that are in the lower range of the 600s. And we also do private mortgage payouts. So we can be a very excellent exit strategy for those borrowers who got into a private mortgage a year or 2 ago and have sort of got things figured out and need a little more runway before they get into A. So send that file to us as part of an exit strategy to get out of one of those private mortgages. We'll refinance the property and get them into a reasonable rate of interest that helps them reestablish themselves over usually a 3-year period. I found it's the most common one, and that'll help them on their journey from B to A.
So on your hourly, if I can get back, Brendan, there on the income side for hourly part-time employees, et cetera, could that be used possibly for a high ratio application? I mean, it's one of those things
we're happy
where the employment letter, shows that they're supposed to be getting paid for 38 to 48 hours a week. And if I've got pay stubs to do that, to verify that, a lender might say, well, it doesn't say guaranteed. So
yeah. I want to throw that one over to Eaton because we've had a lot of sort of COVID related policy changes and trying to treat people that used to be much more employed and now are dealing with less hours in 2020 and 2021 than maybe they used to, or their job situation's a little more tenuous, or maybe they changed jobs in the last couple of years. Eaton, do you think you can comment on how we manage those hourly and part-time employees from a documentation point of view?
Yeah, of course, Brendan. And thanks for bringing that up, Chris, because that is a really good question. So like Brendan said, obviously on the conventional side, there is a lot more flexibility, when it comes to these hourly employees. One thing that we have noticed, about the insurers is what you've mentioned just now, and that is they tend to be a little bit more sensitive as to whether the words, guaranteed hours are there. They're looking for that, solid confirmation that, week in, week out, it's going to be 40. Where we have noticed, the insurers are able to be a little bit flexible is if that hourly income is coming from, a bigger employer, right? So let's say it's, like a Walmart, or like a Costco, or like, some established company that can, come through for the employees when it comes to providing hours, as opposed to maybe a smaller operation or a mom and pop shop. They're a little bit less lenient on that. You know, most letters nowadays for hourly employees won't say guaranteed from what we see, right? But what we have noticed is that, you know, for the bigger companies, it tends not to be a problem, but for smaller companies, it really is a coin toss sometimes. So
I've told the clients that they need to give me at least 2, maybe even 3 months of pay stub showing that they really are getting 38 to 48 hours a week, you know, just to buttress up the application. So, okay, I understand.
yeah, I think, you know, like that's what the insurers would be comfortable with, you know, like at least a month or so of trend. So I think that's a good way to mitigate, and it gives us as the lender, you know, at least something to ask for an escalation.
Yeah. Thank you.
Back to you.
All right. I'm going to talk about some of the value adds that ICICI Bank delivers. They include things like free title insurance for purchases and switches. We talked about that 80% rental offset that's available and the rental worksheet that's available for you. The CCB being used as income up to 100% in most cases. The extended ratios that we talked about for qualifying borrowers. And we have some favorable treatments of things like the heating components, where you're excluding it on investment properties and you're using a very reasonable number on, you know, owner occupied subject properties. And we talked about credit and beacons earlier. You can also order your appraisals directly, so you don't have to go through a Solidify or NAS. You can if you want, but we're not going to make that requirement. We have a list of approved appraisers on our portal, and you can pick your favorite one. When it comes to important documentation that we're going to see, sometimes there's some things we want up front. Other times we're going to condition for a bunch of documents. For private mortgages, we have a process. You know, we have a need to see some documents up front, things like the mortgage statement, the mortgage charge for that private mortgage holder, some bank statements, and some employment documentation we'll want to see up front. So if you have one of those private mortgage payout exit strategy files, give me a call before you send it in, and I'll make sure that it's teed up to be successful right out of the gate. If you have a file that's going to use a rental worksheet to substantiate some of the income, we're going to want to see that probably up front before we issue a commitment. Appraisals for rural properties. We don't do a lot of rural properties. When we say rural and it's ICICI, you still really need to be able to see your neighbor across the street. If it's, you know, a ranch, we probably aren't going to do that, but sometimes we're going to ask for an appraisal up front, depending on how far out of town the property is. And if you're doing a down payment for multiple sources, we're probably going to want to know about that up front as well.
What if you can see your neighbor, but your neighbor is a ranch?
That's a really good hypothetical question. You send me that file and we'll talk about it.
Maybe one of our brokers lives like that. I don't know. I'm not just saying.
I can see the ranch from the telescope on my front yard.
Yeah.
Downstream. Yeah.
Another question for you.
Yeah.
WCB, WorkSafe, long-term disability. Can you use that income, and can it be bonused up?
You know, when we're looking at disability, we're always going to have a clause in the conditions that says it's guaranteed up to age 65, or it's perpetually conditionally perpetual. So the short-term disability is a no, but long-term permanent disability, we're happy to use up to 100% of it. WCB, I remember seeing a clause in our underwriting guide. I don't think I've had a file that's used WCB in a while, but I think there's a discounted amount. Eaton, do you remember on the WCB if there's a partial use of it? Workers' compensation?
Personally, I've never seen a WCB income. Is that something specific to BC? Because that's not an acronym I've come across before.
Yeah, it's a workers' compensation disability through the provincial insurance short term.
Oh yeah, well actually I don't think we're gonna get a lot of success from that because we don't accept the Ontario version of it.
Right.
I think ours is called ODSP.
Yeah.
Yeah, I think it's a similar idea, and like Brendan said, because it's generally short term, it's not something that we can use to qualify, unfortunately.
Right.
Unless you have a letter that's permanent disability.
Yeah, it's going to come from an insurer. It's going to come from like a pension fund or something like that. Then yeah, we're going to look at that letter and say that's permanent disability, and we're fine with that.
Okay.
We haven't talked a lot about business for self. You know, I've really framed the conversation about employees that are purchasing or refinancing. ICICI's philosophy on business for self income is if it's a sole proprietorship, We can typically gross up the line 150 by 15%. We're looking for a 2-year average in most cases on that BFS. There's some exceptions, but really when it's incorporated BFS, we have a philosophy that the corporation's earnings belong to the corporation and the entrepreneur's earnings belong to the entrepreneur. So what that means is if you have a corporation that's bringing in a lot of revenue, but the founder or the director is paying themselves a small salary or paying themselves small dividends each year, because we don't have a business for self stated income program at ICICI, that file probably isn't going to fit for us. So we're looking to see BFS files that are incorporated where they're paying themselves a salary, where they're paying themselves dividends every year, and that's the number we're going to use to qualify the file.
Brendan, do you guys offer a HELOC?
We do not offer a HELOC, no.
Okay, I'm gonna have one more question. Do you offer a HELOC? Different answer this time. Just kidding.
Yeah, I will refer you to one of our friendly other lenders that offer a HELOC. On that subject, if you have a file that has a HELOC as part of the debt servicing, we are going to look at the amount that is owed on that HELOC and not necessarily the full balance that's available. So keep that in mind too. And that's about it. So I will make sure that Deb, if she doesn't have it already, has your brokerage portal login credentials. That's where you're going to be able to find our most up-to-date rates. We're going to be able to find our up-to-date appraisals list, program overviews. Like, you probably want to know what the rates are. I don't think I have a slide for that, but our insured rates, as I mentioned, I think earlier, are very competitive. You can get an insured rate right now at 1.69 on a 5-year fixed. You can get a variable rate at prime minus 1%. So you're looking at 1.5% as your out the door rate for at a variable right now. So very, very good rates that you can pitch to your rate shoppers that come through your door. On conventional files, our most popular choice is a 3-year fixed right now, which is set at 2.94% and paying you about 65 basis points. If you're looking for a shorter term or a longer term, like 1, 2, 4, 5 years, those are available too, all in the low to mid 3% range. And of course, the longer the term you select, the better it's going to pay you. So 5-year fix is going to pay you 100 basis points, whereas a 1-year fix is only going to pay about 50. So the 3-year I find is, again, the most popular based on the fact that it's paying 65 basis points, which is a nice fair compensation for the work that you're going to do. And it's also a pretty good rate for your conventional borrowers, especially if they have imperfect credit or they're going to get a decline from the bank. So we're happy to get them in the door under 3% on a conventional file. And that's about it for me. I see a few questions in the chat. Maybe we can go through those.
We got most of those asked during.
I see one for previous bankruptcy. That's fine. If you have a previous bankruptcy that's been discharged, or previous consumer proposal that's been discharged by at least a year, we're happy with that. We don't want to see bankruptcies that have a piece of property involved, but if they had some troubles paying off the car loan or paying back their credit cards, then once that's been discharged, we're going to be able to work with them.
And Deb was just asking if when the meeting is over, if you could give her a call. I think she has a question on a file.
Yeah, absolutely. We're happy to take that offline.
Does anyone else have any questions for either Brendan or Eaton? We will take that as a no.